Hey guys, how are you? Welcome back. As I know everyone's following me on Facebook, so we had some fun last week at a wedding and a vacation in Puerto Rico. We had a great time. Not only having a great time relaxing with my wife, but we spent time, about 5 days, with very like-minded people. And it's funny how when you're with like-minded people, how you think and how things go. But the best part is while I was in Puerto Rico, my business didn't skip a beat. We actually acquired a couple more turnkey properties, actually sold two while I was away, just from my phone, which was phenomenal. Love that. Love the getting wires while we're away. I'd set up a couple meetings. It's funny, this last month, it seems like I've been an expert out there and when people set up their 401ks and IRAs, self-directed IRAs and 401ks, and I'm not a financial planner by any means. I'm not an accountant by any means or an attorney, but we have been known as experts in setting up self-directed IRAs. In fact, I got to meet with the owner of Camel Plan, which is one of the self-directed IRA companies I use and refer to. And we're going to be putting on a course shortly for our students, because it seems like I've been meeting people, like I said, in the last 4 to 6 weeks. I think we've probably set up about 15 different self-directed IRAs. We've used that money for private lending deals. We've used that money for some note acquisition, joint venture partners we've done. So people are seeing some nice returns in their retirement accounts that they never knew they can get. And once you become an expert in that, people will use you for everything. So what we do on that is we'll help them set up their self-directed IRAs, 401ks, Coverdale accounts, health savings accounts, help them roll their money from their current traditional IRA companies and custodians, like, wherever it might be, Fidelity, Schwab, whoever it might be, into their self-directed IRAs. They're not taking it out, they're actually doing a rollover, so there's no taxes on that money. Now, there are some rules we can use that money on, and I'm not gonna go into that in this course, but what we've been doing is we've been helping people roll that over, setting up accounts, and then helping them invest that money into some of our deals so they can make some nice returns on their money, backed by real estate or notes or whatever it might be. Anyone needs help with that? I feel like we've been swamped with that lately. Like I said, we've probably set up about 15 different investors over the last 4 to 6 weeks with this. We've probably brought in over close to $2 million on these deals from investor money, with a lot more out there right now. So, and we're showing them how to earn interest tax-free, tax-deferred, whatever it might be in a traditional Roth. But what I wanted to get into on this segment is something we've been learning a lot. And like I said, I'm not a tax advisor, an accountant, or an attorney. But what I do is I take control of my own business, and I challenge my accountant. And Chris will, if he hears this, he knows I challenge him, and we're back and forth, and we love talking strategy. And he's such a great guy. He listens to what I say, and he knows where my mind is always thinking. I'm always looking at doing things legally and doing things the right way, but offsetting my taxes and however I have to do it. The IRS has a rule known as a safe harbor rule for rental property expenses. That's why rental properties are so important. I know sometimes people say, well, they're not true passive income, because you do get calls here and there. It could happen. And if you have a great property manager, they help you take care of it. But the safe harbor rule for rental expenses, after January 2016, it was expanded from $500 to $2,500. And why that's so important is, let's say, for instance, you replace the cost of a roof on a rental property for $4,500. Ordinarily, the capital expense you'd have to deduct over the life of the roof, right? So let's say for 25 years, I think we figured it out, I wrote down, it's $180 for 25 years. That your capital expense you'd have to deduct over the life of the roof. But if you break the cost of the roof into two bills, okay? Let's just say you break it into two bills, okay? Let's say one bill is $2,400 for materials, and then you have another bill for $2,100 in labor. And that's about right, okay? So you're at $4,500. Two bills, $2,400 for materials, and $2,100 for labor, okay? Since they're both under $2,500, the IRS allows you to deduct these expenses all in the first year. Boom! Is that freaking awesome? $4,500 in year one. Full expense. Safe harbor rule, okay? Whereas you would have had to do $180 over 25 years, $4,500 year one, okay? So if you could work with your your team, whatever it might be, work with your subcontractors, your contractors, whatever it might be, and tell them, listen, I understand roof's $4,500. Can we break it up? $2,400 in materials, $2,100 in labor. It makes sense. It has to make sense. You can't do this and it doesn't make sense, the IRS. If you do that and you add them together, it's a huge deduction of $4,500 year one. Now, back to rental real estate. I'll be honest with you. Rental real estate is the only business that you can go year after year making money from rental income, showing a loss on the books over 3 years, and it not be considered a hobby. Let me say that again. The only business that you can show a loss year after year for over 3 years where it's not considered a hobby. Any other business that you have that you show a loss from 1 to 3 years, the IRS will consider it a hobby and you'll not be able to take those write-offs. Now, rental income, benefits of rental income number 2 is you create growth. There's 4 quadrants to rental income, okay? I'm going to say there's 2 guarantees, possibly, and 2 that are maybes. 1, cash flow. You collect that rent, it's cash flow, okay? 2, you pay down the debt, you have debt reduction, okay? 3 is possible. We don't know about 3. 3 is appreciation, possibly. We don't know if there's appreciation or not. We can't guarantee that, okay? And 4 is rent increase. Can't guarantee that either. But let me tell you this. Let's say you buy a property for $100,000 and you collect $1,000 a month in rent. That's $12,000 a year minus your expenses. Let's say you net at $500. You just put $6,000 in your pocket a year. You also depreciate the interest. You depreciate the land and the assets in there. I'm not going to go through all the depreciation assets on that. Okay. I'm just getting to the point now where, let's say, if you do nothing else, and after 15 years, you pay up $100,000, and that property is worth $100,000, and you sell it for $100,000, you just put $100,000 in your pocket. And what about all the depreciation? Well, people come back to me and they say, well, because they think with blinders on like this. Okay. Well, but I have to now pay tax on the depreciation. No. We have that infamous 1031 exchange. Okay, so I'm not going to go into a full course on this step by step right now because I want to keep this as far as this course with this little video is on safe harbor, and you really should share this out because it's so damn powerful for anyone that buys investment properties. Okay, let's keep it on that. But let's start thinking outside the box. I mean, I could take a property and 1031 it, exchange it over and over and over and over again. And if I want people to say, well, you get no cash out of it, I call BS on that. Because you can take lines of credit out that cash and tax free on that lines of credit. And then you 1031 the property over and over and over again. And then it goes into your trust, which goes to your kids. So there's a whole different aspect on how trusts work, which we're not going to get into on this episode, but how we offset those taxes all the way through, and your kids aren't going to have to pay tax on that, on what you rolled over time and time again. But once again, this is high level stuff. I want to keep this video focused on safe harbor. So let's start thinking about that. Safe harbor is $4,500 a year. Okay? I'm sorry, $2,500 a year. Okay? And it was expanded in January 1st, 2016 from $500. Okay? So you want to make sure that when you do any of these jobs, you break it up and you keep it under, $2,500. So the IRS allows you to take those expenses year one, okay, rather than over the 25-year period, which would have been on a $4,500, $180 a month. I'm looking now because I just wrote my numbers down so I don't have to keep calculating for you guys. Okay, so very important 2 things. Start working on your retirement planning with self-directed IRAs, solo 401ks, health savings accounts, Coverdales. Take control of your retirement. You can invest those in notes, mortgages, rental properties, precious metals. There's a number of things you can invest those in. Businesses. 2 is start acquiring some rental properties for yourself. Even if you don't want to acquire a lot, acquire 1 a year. There's so many other tax benefits that acquiring at least 1 rental property a year go for you. you eventually become a professional real estate person. You could say you do over, once you can actually say you do over 720 hours a year in real estate, you become a professional real estate person, there's all the tax benefits there. Okay? You travel to your rental properties. I do a lot of rental properties in Cleveland, Ohio, Memphis, Tennessee, other than Delaware where I live. Why? Because the numbers work great. We see double-digit returns in an emerging market. But also, when you go out to Cleveland, we go out to a basketball game, we go visit our properties, of course it's a tax write-off for us. We go to Memphis, we go visit Nashville, we go visit Memphis, we go visit our properties. It's a tax write-off for us. Obviously, we're doing a lot of work. Obviously, we're meeting with our property managers, our contractors, our realtors. So we have to pay to get out there. It becomes tax deductible. Now, you might think about doing rental properties if the numbers make sense in the market you want to be in. If you want to go to Hawaii, the numbers just aren't going to make sense right now. You want to go to Florida, you got to be very careful. The numbers might not make sense. So it has to work both ways for you. So once again, start looking at that safe harbor. Really start thinking about your business a little differently. Look at the tax advantages and tax benefits on every deal. Look at being a passive investor and an active investor. You actually probably should do both. You don't want to just lend your money out and not own anything. Most of my people that I put in self-directed IRAs, I tell them pick up some properties for yourself and do some lending or do some joint venture deals with us on non-performing notes. Just to give a shout out, one of my new students, Chris, I don't know if he's listening. He just joint ventured with us on a non-performing note. We sent a letter to the borrower. We had an attorney call the borrower instantly. I was in Puerto Rico. We had back payments of $3,300 come in last week. So the returns are just a ridiculous return right now. So it happens. It doesn't happen all the time like that. But it was his first non-performing note he joint ventured with us on, and he did phenomenal. He actually, I told him don't get used to this. It's not like going to Vegas, throwing the dice and winning, and it happens every time. But he sees the fruits of that, and I'm sure he's going to watch this video later and he'll give a thumbs up and he can say what he wants to say about it. But things do happen when you do your due diligence. All right. So once again, I'm happy to give this information out there. I'm not selling anything. I'm not trying to become your accountant. I'm not referring you to any accountants. Once again, I'm not an accountant or an attorney, tax advisor, claim to be one, want to be one. I'm an entrepreneur who really takes control of their own life and their own business and really wants to learn everything I could possibly learn in the industry. And I always love to give out the content I have. And I'm looking forward to, as you know, a couple weeks ago I was in San Antonio with Chase Thompson doing our marketing video, our online training. I'm hoping that comes out in the next month or two. I can't wait till that gets out because I've been getting hit up left and right by people asking me for information on that. And once it's out there, you'll have first access to it. I know I have 2 speaking engagements coming up in April. One in Pennsylvania. I think that's April 12th. I'll be laying down some golden nuggets there. And I think I'm doing another one, I think April 25th in the state of Delaware. A bunch of real estate agents coming together, listen to how to work with investors and what we look for. And I'm just loving giving out the content to people that are looking to take their business to the next level. I see all these texts coming up. Hey guys, I'll answer you soon. I just saw, Alexander, Graham, I see John, Jonathan Burden, Troy, everybody on there. Hi, I love you guys. Thanks for tuning in. And if this is helpful for you, share it out. I'm sure anything I can give you is something you could use in your tool belt when you work with your investors that lend you money. If it helps you, great. Get it out there. But take this into your own life. And like I said, we're blessed. Like I said, we were on vacation last week in Puerto Rico. Closed a couple deals while we were there. Closed a private money deal. Got it all set up before I left. Did the paperwork while I was out there. Funded the deal yesterday. So we closed on another private money deal out here for a new a fix and flipper that we've done a couple deals with already. I like the loyalty, and we keep looking to work with people that are loyal with us. And I love everybody that's on. Thorny, it's good seeing you. Thanks a lot. Once again, always trying to hit people with the golden nuggets, and not here to sell stuff, just here to help people with content. And we'll be back soon. I know it's been about a week or two, but you might have seen my Facebook Lives. They were a little different last week. We were partying in Puerto Rico at a wedding event of the century. But love you guys, and I wish you the best in 2017. Make something happen.